Hey guys, can you guys hear me? Yep. Good. Okay. All right. Sorry. It's been like one of those mornings where I haven't even showered yet. And it's 9:30 in the morning. And I've been sitting here for basically 6 hours straight. I can't wait to take a shower, which will happen right after I'm done here. So let's talk about where we're at. All right. So equities have broken down a little bit. We are getting comfortable below support, which that's important, to realize that what's happening is we're now getting comfortable below this 3,300 support level that was holding us up. And as I mentioned to you guys, I really think that this opens the door for a move down to 3,100 or the 200-day moving average. So you're seeing certain things in the currency market position itself for the potential of that happening. So if that happens, what we should in essence see some dollar strength. And you can see the dollar is pushing higher. Obviously we're at highs that we haven't seen since August, mid-August. So about month highs. And if we get above 94, that should open the door for at least 94.50, which, you can see the spike low here, which I got to redraw that a little bit. So 94.50, possibly even a 95.50, 95.60, depending on, how much risk off is happening. As I've mentioned to you guys before, I really don't think that this is necessarily the dollar leading the move. It's going to be equities. Everything's driven by equities. So, but you see certain dollar pairs actually, firming up and preparing for that type of move. One of them would be the dollar Canadian. We've got this inverted head and shoulder pattern that is pointing towards the 200-day moving average. Hold on, let me shut up my... I'm sure you guys can probably hear that. Okay, I have to shut up the squawk there for a second. All right, and like I said, I'm not sure if you guys could hear it, but I can't focus when I've got somebody else yammering in my ear while I'm trying to, do analysis for you guys. So anyway, the dollar Canadian, as you can see here, we have that inverted head and shoulder pattern, should take us back to the 200-day moving average, which is, 135. Now, if you guys, those of you that are listening live right now are ForexAnalytix subscribers. So you're probably looking at, the active patterns in play and saying, well, 200-day moving average is at, for the dollar Canadian is at, 135.15. But, and you can see I had it originally at 135 because I wanted to be out ahead of the 200-day moving average. But the question was, or the question you might have is, why are you looking at 136.10 now? And the reason why, just so you guys know, is that's going to be near the 38% retracement of this move. So if you take the high to the low here, the 38% retracement comes in at 136.20, 136.30, depending on exactly what low you're attacking there. But there's going to be some horizontal resistance. So I figure that if we do, get the 200-day moving average, we could squeeze above that and quite possibly get to 136 and change. But that's a problem I'll deal with. I hope it's a problem that we're going to have to deal with at some point, is when the dollar Canadian gets up and above 135. Then you got to figure out how to navigate it from there. But that's why I had to move up the targets. Now, with the dollar Canadian, you can see we're also stalling right at the previous low from back in June. That's holding us. I expected it to hold us a little bit. I've taken some profits in dollar Canadian. I am looking for a dip now to be a buyer. That was way bit down there. So I'll look for dips like this down to 132.60, 132.70 to add back to the dollar Canadian later today. I might not even get that opportunity either. I mean, the dollar CAD can just take off. That's quite possible. Problem is when trends start like this and you catch like a reversal, sometimes the market just doesn't let you get back in. It's in the middle of just squeezing everybody out. So it's possible. All right, let's talk about like the euro. So the euro is coming down to what is, in my opinion, key support. We are back testing that. This is that broken trend line. That's the pink line here. But more importantly is going to be this. Here, let me delete. Well, actually, I don't even need to delete that. Right here, 117, this is going to be really critical, because if we break through 117, that should open the door for a 116, 115 move in the euro dollar. Obviously, you can see the euro is trading very heavy, but I also have to throw this out there. I've seen the euro trade down at these levels, as you guys have, and spike right back up above 118. So I get a little nervous about trying to short the euro. I'd rather be on the long side of the euro. I'm just not buying it here. Okay. Again, as I've told you guys, I'm looking for dips down to 116 to 115 to be a buyer, not at current levels. Some of the other big developments that are happening right now is, let's talk about the yen right at this moment. The yen spiked up, and which really was irritating to me, because we might have created a false breakdown. I was really hoping the dollar yen would break lower. I had a short in the dollar yen, and then it started squeezing, broke through this trend line, and I managed to not have a very excessive loss, but still, I have other yen pairs that I'm trading on the short side, like the euro yen, the Aussie yen and the Kiwi yen. And what's not gonna help is when the dollar yen creates like this false breakdown. Now we might get back up to 105 in the dollar yen, but it's definitely trading a little differently than it used to. So one of the reasons why I think the dollar yen is also spiking is the move in gold. Back in the day, gold would go higher. That was a show of risk aversion. Then you'd see yen strength with that, right? So that means the yen and gold used to have a very parallel relationship. We've seen that break as of late, but the sell-off that we got in gold today, and most of you know that gold, broke through the 1900 level, even though we're trading right at support right now, or, gold should roll back over here. One of the issues that I have with gold is that gold broke down, and that might have sparked a little bit of, yen strength that moved lower, and that might have this move that we're seeing in gold, the move lower in gold has sparked some yen weakness, and that would be typical in a risk on risk off situation that we've had, the type of correlations that we've had pre-COVID. Now with the move that we saw in gold, and gold's coming down, even though we're seeing some risk, even though we're seeing some risk off, gold coming down I think has weighed a little bit on the yen, and that's allowed for the dollar yen to rally. Now I was talking to the guys in my office. You guys know the dollar yen down here, the 104.50. It's a very hard short, because we found buyers down here almost, every time over the last couple of years, since 2018, any dip down here has found some buyers. So it is a little hard being on the short side of the dollar yen at these levels, but that doesn't mean that it's going to hold. I just think that anybody who's short is probably covering some up, and there might be some official interest to sell yen down, at these levels, 104.50 or whatever. And talking to the guys in my office, we were wondering if maybe they're using, futures contracts, because it costs less and they can still move the price more. and to get spot to move a little bit. That it's kind of a stealth way of intervening, or you know, kind of you know, trying to lead the market a little bit, manipulate it a little bit. You know, I think there might have been a little bit of that this morning as well. I guess the point I'm trying to make here is we got to be very careful being on the short side of the dollar yen down at these levels. I'm not short the dollar yen anymore, but I am short, you know, euro yen, Aussie yen, New Zealand yen, those types of things. But I'm being a little bit more careful down here. That's what I'm trying to say. All right. Anything else that I really wanted to cover today? Aussie and the Kiwi a little heavy, but we're still on those ascending channels. Guys, just I think today, let's watch the S&P. They're going to try to bounce it a little bit here, I think. You know, the S&P probably back towards the, you know, 3270, 3280 level. But if we close below 3300, that's where the market's going to be a little nervous. Okay, and remember, guys, if you haven't signed up for the Traders Summit event, make sure you do so. You might see that Mark Dow has joined Mark Dow has joined the panel, which is pretty awesome, because then you got Mark Dow and Peter Schiff is going to be kind of like a cat fight. I think it's going to be interesting to watch those two go at it. Plus, we still have all of our other speakers, and it's going to be a great event this weekend. So make sure you guys are listening in, and make sure you register. I'll talk to you guys later. Thanks, everybody, for tuning in, and we'll see you guys in the chat rooms. All right. Ciao.